Hello my friends, welcome to another video. This time we're going to talk about LMND. LMND is the Israeli insurance or insurtech company that always makes bigger losses than it turns out revenue. So we already know where this is heading. But let's find out together, shall we? So LMND stock. This company was quite the hype during the pandemic, and back then I didn't understand why. But since its valuation is in a free fall lately, I guess we need to check it out again to see if it's beginning to look interesting. But before we do, may I ask you to consider subscribing? It's free and it's helped me out a lot. Also, don't forget to hit that like button or leave a comment if you enjoyed this video. In order to give you some perspective on the stock's performance, I like to do the what if you bought 1 million in the stock at its IPO, what is it worth today thing, like I did with Palantir. So at IPO, the stock was worth about $69 and now it's worth around $14. On a side note, I wonder who makes up these valuations on which they IPO. I know it are so-called experts, but seriously, these guys should be put in jail rather than get paid for doing this. Anyway, your 1 million is worth today $202,000. So that's a loss of almost $800,000. So we are already at a great start with this company. We'll talk more about valuations later on in this video, but first, like always, I want to get to know this company and see why it was such a hyped up stock. Forget everything you know about insurance? I do love marketing talk. But okay, I've forgotten everything. They have great prices. That's something I've never heard before. Very interesting. Okay, so great prices, some news outlets for credibility reasons, and a lot of happy customers. It has a great app, that's always good, and it's backed by reinsurance leaders. That could mean anything really. Marketing is really doing their job on this website, that's for sure. 100% digital. I would hope that all insurance companies in the US are already 100% digital, but okay. I was waiting for this. Artificial intelligence. Yes, I love it. It seems a common thread around these hype companies. AI. You can't really explain what it does or how it works. You just say it makes things better and cheaper and gives you a competitive advantage, and people just believe you. Even if it's the dumbest thing ever, people buy into it. So AI for the win. I'm betting my bottom dollar that this is why there was so much hype about this company. But let's continue. LMND reverses the traditional insurance model. But remember, we had to forget everything we know about insurance. So I have no clue what they are reversing here. But it's nice as an investor to read that this company that has bleeding red figures gives money leftovers to causes. The help the CEO get a brand new Ferrari cause, probably. Now that was their homepage. What have we learned? It's an insurance business that has great prices, fast payouts, and enabled by AI. So to me, nothing special there, except for the AI part that enables fast payouts. As an investor searching for that extra moat, I want to know more about this AI part. I found that they upgraded their AI model in Q2 with a new predictive model called Lifetime Value 6 or LTV6, which attempts to determine the lifetime value of a customer based on their likelihood of switching insurers, the probability of them purchasing multiple policies, and the odds of making a claim. From there, LMND calculates an appropriate premium. But LTV6 dives even deeper into LMND's business, identifying underperforming geographic markets and products to allow the company to rapidly pivot to optimize its financial performance. So I guess we should see some better numbers in Q3 or Q4 since they are using this new vastly improved AI. Also in July this year, LMND bought MetroMile, a vehicle insurance company, for $145 million in an all-stock deal, which in hindsight was a great price. When they first announced the acquisition, if they would pay at the announcement date, they would have been a $500 million deal. However, since both LMND and MetroMile stock prices dropped, it is now a $145 million deal. And since MetroMile has cash reserves of $155 million, you get $10 million in cash bonus for doing the acquisition and a whole company as extra. So that's a deal that turned out great. Okay, my friends, Now that we have a bit of a view on what Lemonade is and what they have been up to lately, we should have a look at our favorite thing, and the only thing that matters, and those are the numbers. Let's first have a look at the stock price. It has been really all over the place since its IPO. In peak hype, it reached a price of around $164. They gave it a market cap of more than 9 billion. Yes, that's 9 billion with a B. For a company that had back then a 94 million in revenue the year before and made a loss of 122 million. I wouldn't even pay 9 million with an M. But hey, that's me not understanding the value of their disruptive tech, I guess. That was the past, and this is the present. So maybe their revenue and profits are now more aligned with their dropping share price. So maybe today it is interesting. Let's see. So revenue shows a nice growth. This looks really nice. And I see income following the same trajectory. But when your income are actually losses, I guess you really don't want them to grow. Currently, for every $1 in revenue they make, they lose $1.5. What a great business this is. Nice growth in everything over the years. If we have a look at the last quarters, you see the revenue, excluding the last quarter, has been growing at an average of a whopping 11%. If you're counting inflation, you're almost making a loss. But yeah, great growth numbers, my friends. I would be happy to pay a big premium for such an incredible growth company, wouldn't you? Now the last quarter, revenue was up by a lot. But this is of course because of the merger with MetroMile. Nowhere in their presentation of the Q2 earnings I see them split their revenue up between old Lemonade and MetroMile. If you found it, let me know in the comments down below if I missed it and how much it was. But maybe I'm just too critical comparing revenue with the net income, and I should, as most do, compare it with the adjusted EBITDA. Yes, then it's only a loss of about 65.7 million instead of 91.4 million. So that I agree is much better, but is by no means okay. Their guidance for the next quarter is a revenue between 77 and 80 million. So that's between a 4 to 8% growth quarter over quarter. I love it. But we haven't yet talked about the impact of the new AI. That is because we see no impact. They are still doing the same thing, making huge losses, having small revenue growth, and the AI doesn't do anything that makes us, the shareholder, happy. This company is currently valued at about $1 billion, and people call it cheap. In my research, I came across articles that say it's cheap now because the valuation has come down. Yes, true. If I asked 10 billion for a Toyota Corolla and then a year later asked only 1 billion, the valuation has gone down dramatically. So it must be a great deal, right? Right? It really makes me a bit angry that there are this many so-called experts telling stuff like this on the web and making people fall for it. Trust me, I'm not always right and I'm no expert by any means, but I do believe I have some more common sense in my brain than a lot of these idiots. And please, when I am wrong, I strongly encourage you to tell me in the comment section. I don't mind being wrong, I mind that people don't learn from their mistakes. On the plus side for Lemonade, they have about 1.1 billion in cash equivalents and investments. If they can get growth back on track, which they are trying with their Chewy partnership, and if they can get a positive cash flow going, this could of course become interesting. I'm curious in how they will perform in 2023 and thereafter. I hope I'm totally wrong and nobody loses their money over this, but I really wouldn't want to try my own luck. So my friends, would I recommend anybody into buying Lemonade? What do you think? I wouldn't recommend it, and if you have it, I feel sorry for your losses, because nobody is on the plus with this stock. I might revisit this stock again later if I read somewhere that the numbers have changed drastically or that the company is taking a different financial approach. I just might go over it again, but chances look pretty slim. At the end of the day, you have to just take a step back and look at the stock market and see all these different companies you can invest in, and always ask yourself one question. Is this the best company of any out there that I can invest in? My own hard-earned money? If it's yes, then by all means, go ahead and buy shares. If you're not sure or it's a no, then don't do it. You really have to think, if someone showed me those numbers without knowing the context of the company, would you even consider it? And context can be important, and potential markets are important, but only a handful of companies really deliver on those promises, and a lot of them fail. So do you want to take that risk? There you have it, my take on lemonade. It will leave a sour taste in your mouth, that's for sure. I hope you enjoyed this video. If you like it, hit that like button and don't forget to subscribe. Remember, it's free and it helps me out a lot. Catch you next time. See ya.